Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and super excited today because my new microphone cover actually looks the way I've always wanted it to look. I found the one and hopefully it sounds right. Today, I have with me Dustin Yoder, the CEO of Sureify, and I hope that I didn't completely butcher your name. Dustin, thank you for joining me today.
How's it going? Perfect.
Awesome.
Wonderful.
Awesome.
Wonderful.
Awesome. And Dustin, we always give the guest a chance to do the elevator pitch. And this one's an interesting one for me today because I know a lot about PNC and I know just enough about life to be dangerous. And I know nothing about annuities or surety. So what is Sureify?
Well, don't worry, because I feel like insurance is so stinking broad that, it's to the outside person, it sounds like everyone falls under the same umbrella. But to your point, I know quite a bit, specifically on the technology side about life, annuity, and then I go from there. But PNC, the more I dive into it, even from a technical standpoint at this point, although I got half the guys from Guidewire over on my team, so I learned from them, it is a whole nother world. So I totally agree. And if it makes you feel any better, property and casualty has been about 10 years in front of life and annuity from a technical, progression standpoint. So maybe that'll make you feel better. Meaning
it is very rare that anybody tells me that PNC is ahead when it comes to technology.
Yeah, it had to do with like kind of the Geico era and I think there was just more pressure applied to PNC earlier on is my real answer, and like churn cycles too, with the average PNC customer only lasting, the average persistency of like 3+ years and life being like 8+. I think the natural cycle was like more pressure faster and cycles were happening faster. So I don't know. But yeah, let me, as you said, I think I'll give you, my rapid fire, what we do. So we are, as noted, on the life and annuity side of the world. We're actually strictly B2B and verticalized in life and annuity. And so what we do is sell directly to large and small life and annuity carriers. So we only sell to carriers. We don't sell to agents or anybody else. We're selling our SaaS solution to the carrier direct. And so our system, to visually picture it for everyone, sits on top typically of your policy administration system. So we're like a new emerging core system in that we sit on top of it. We think there's a lot more going on today than ever on top of your policy admin. And so where that manifests itself, where people can really visualize and understand what we do, is we sell 3 different products within that platform. One is called Lifetime Acquire, which enables the insurance company to sell digitally direct through call centers, through agents, et cetera, in a omni-channel approach. So really like instead of it all being disconnected, it's one connected into for real-time sales, accelerated underwriting, et cetera. The second, called Lifetime Service. So after you buy a policy, right now, a lot of people are forced to call the call center or, submit a form. In this case now, through web or mobile, that policyholder can, log into their insurer and change their beneficiary or auto pay or whatever, make a withdrawal, et cetera, depending on life and annuity products, depending on what it is. So really digitalizing the servicing capabilities. Sometimes you could say there's a bucket of about 60 transaction style capabilities or plus that a life insurer and or a policyholder would want to do. Those are kind of broken down and kind of gets nitty gritty. And 60. Then the last is called Lifetime Engage. I know I'm blowing your mind here, Tony. The last is called Lifetime Engage, which actually was the first product we created, and it was to digitalize the relationship between the life insurer and the policyholder. So these are for in-force customers. So if you're servicing or engaging, you're an in-force customer. And the idea there was, well, right now they're only getting bills and maybe a yearly premium notice or a policy update in the mail, and that was about it. Your agent may be long gone or never talks to you again. You could be orphaned, you could be, I mean, you name it, there's lots of possibilities. But even if you have an agent, supposedly, very, very little interaction is done. So how do we digitalize the relationship to educate, upsell, track, contact, market to, feed relevant information based on that persona from the carrier themselves to keep that, we call it building trust with that policyholder via the digital channel. So that's called lifetime engagement. So when you bring it together, it's called the lifetime platform, in short, to basically enable a digital relationship for the lifetime of that customer or pre-customer through the whole life of the policy.
Okay. So I'm glad that I mentioned that I know very little about the life side, because quite clearly I'm way out of my element here. Okay. So
That's
sure.
good. That's good. We'll have a good combo because of it, right?
Perfect. Yeah. So Sureify is a platform, and your client that buys the platform are life insurance carriers.
Correct. Only carriers, the paper, like as we know, the paper carrier or like the product carrier. That is our only client.
So this is so interesting.
We partner.
So go ahead.
And by the way, we partner with reinsurers or policy. You partner with a reinsurer or you'll partner with a policy admin, and then maybe an agent or an extension of that carrier will use your platform. But in regard to the buyer, right? We have end users, which is a different discussion, but the buyer itself is always, there's only one person that we work with on a financial and control level. So much so, like, by the way, no one ever knows at Sureify, like all of our.
I was going to ask that question. So it's white labeled.
Yeah. So it's all white labeled. Like Sureify desires to be the most loved and trusted by the insurers, and yet the world may be unaware of them for eternity, and that is perfectly fine with us.
It's white labeled. So basically, let's say that I run a 150-year-old, 200-year-old. You know what? Let's say that one of our listeners.
Don't go 300, Tony. Don't go 300. But we can go. Let's go 150. Let's go 150.
I was gonna flex my insurance nerdiness and go with Philadelphia Contributorship, the oldest insurance company in the States, founded by Benjamin Franklin and still in existence. I don't know if they do live. I'm assuming that that's what they do. I have been outside their office. It looks beautiful. So anyway, let's say that I run a 100-year-old carrier, right? Which there's many of. And of course, our systems are very, very old, right? And we're like, it's not quite stone tablets, but to the customers, it certainly looks like stone tablets. It feels like stone tablets if they're used to, if they're Amazon Prime members and they're used to Gmail and like modern things.
Right.
So we can bring you on and replace basically all of our systems with you guys.
So that would be a massive statement. So no, I'll start by saying, to be objective, no, you will not replace all of your systems.
Okay.
However, your use case is correct in that a 100-year-old carrier calls you, they're not doing any type of digital reaction. Like you go to their website, let's say, and you try to look at a life product, however you got there, or you would be like, you'd submit a lead and that would be as far as it is. That's actually pretty common today. It says an agent will contact you shortly or something to that effect. That would be use case one. It's an example of like someone comes in and says, this has got to change. Even the agent, right, would want that digital sales capability too. We would come in, and I'll change the story a little bit in regard to the outcome. So that reality is there. They maybe have 3 or 4 core systems that they have different products on. They want to wake up in 2022 because we're a couple months away, like maybe end of first quarter. They want to be able to sell digitally. Can they do it? So the answer is, first, very rarely does anyone throw away their core system. That's like it's kind of a misnomer in that people usually are looking to, one, maybe implement a new SaaS-based policy admin or core system, but they'll usually keep the others. So either we're gonna help them basically, I'll say, figure out, because it could be that they're building a data lake, could be they want to use our platform almost as a middle layer. It could be a couple things, but they're going to keep their old systems. They're going to add a new one. So let's pretend there's 5 systems, 4 old ones, and we're going to come in, sit on top of that, and make the world spin around for everybody. Now,
Okay.
our job, so it's a little different than, very rarely does someone implement a new system and migrate everything. That's a wish and a desire.
Yeah.
But in the life space, we see a lot of people rather saying, hey, we're going to let these books run off. We are going to implement a new transformation project the next 12 or 24 months on a new life policy admin. In the meantime, we need to be a digital company. They'll use that word, will you put them in quotes? So we need to be able to sell, service, and engage digitally. Please help us with that transformation.
And it makes sense. If I think about it, it makes sense because even in PNC, where your average policy is probably a year long, right? There's some commercial policies that are longer than that, and there's some personal policies that are shorter than that, but your average policy is probably a year long. It's still painful, very, very painful to change platforms, right? And generally what you do is you let the stuff expire, and you either write the new stuff on the new platform, or you let it expire, and as it expires, you slowly write it in the new platform, right? And even that's painful. I can only imagine for a life company where your policy might be decades long.
Correct.
So,
the average is over 8 years, let alone how long. Like if someone's been writing, for 100 years, so to speak, and they every 20 or 30, let's say the last 40 have been largely the tech side of things. Since, maybe 70s they started with stuff, and then now it's 50 years later. I think yes, you have old systems that still have active policies on them, and so whether it's Cobalt or some type of green screen system, and so you're really looking for a solution on top with our software. That's actually where I would tell you what I'm most proud about is I think people, InsurTech, right, it's easy to say we'll build something brand new and it's all greenfield. I think when you work in B2B, the companies that are succeeding, and I would say, like, I hope people consider, like, we consider ourselves to be promising and working hard for the insurers. And so I would say to us, that's success, and we're growing. We work well with the insurer, like, their problems and you help them transform. Offering some new technology that doesn't meet them where they're at is not, it doesn't seem to be the answer, right? Like, that's why there's a lot of eye rolling. Yeah, there's definitely the eye rolling when someone comes in and shows everyone the flying car, but then everyone on the ground has a horse and buggy. I think it's really hard to like, that message is like not always well received, because it's not as if everyone doesn't maybe admire or wish that they could wake up tomorrow and just be flying cars, but that's not where we're at.
100%.
That's really that's the art and science, I'd say, to successful B2B InsurTech, is being able to work with them where they're at and work with them as they go along that journey.
So it sits on top of my existing system. Does my existing system have to be API ready, or are you able to plug into us?
So no. Yeah, so the answer is that some systems just aren't going to be API ready. I think there has to be endpoints, in the sense of, like, it could be in the more, there's all different use cases across our clients, but it could be that someone may start out with like a data dump kind, or daily batches, or something to that effect. Keep in mind, like, the data has to go in there if you're trying to do anything. Usually they're not selling in real time with a system like that, but rather there's an in-between, catch that would then, I'll call it, I'm going to misspeak in technical terms, but like, ultimately, like, if you're trying to do real-time transactions and or representing to the client, the policyholder, that something has been done in real time, there has to be a level of being able to secure that action in one system or another. Now, whether or not it makes it into the core system of record because Jim or Susie changed their beneficiary on a system that's 30 years old, it may sit somewhere for X amount of hours in transit and then be dropped in. So it's kind of like that is part of the solutioning to understand the constraints or realities of the setup. I think the value though is like, yes, well, we figure it out with the client, and or like our system isn't dependent upon APIs like all your systems having them, but rather we're going to utilize APIs and then different logic to make sure the system of record gets updated. So it's a group thing. Like I always say you can't create a digital insurer without I'm calling like a full digital process and insurer without like the teams working together. You can't throw technology at insurance and just expect it to work. I think there's got to be we will work with our clients. There's our side of the team, whether there's 3, 5, or 6 people on our team on one side, and then there's 3, 5, 6, or 20 on their side, right? You're gonna figure that out. The easiest case, if you do greenfield, right? Let's just say someone, I don't know. There's cases these days where people are selling off, their old books of business. They're deploying. They're going to launch a new line, like a new life insurance product. It's all going to be on a new policy admin that's cloud-based. Okay, well, that's the easiest use case. We can talk about that one all day, but that one it's not rocket science, right? Like, because everyone's API enabled. There's still logistics involved for sure, but it's usually that you have 5 other ones plus that one, and that's where everyone is wanting to ensure. That's the harder part.
Okay, and you guys serve basically all sides of the life business. So life, annuity, group. You can help in pretty much every life
but our main
product.
Yeah. So again, like they're going to be different lines. So like, for example, I have to be careful just to throw out the yes. Why is those are all different systems and different like. I would be usually like an annuity product or a group life product, as an example, would be, it's going to be actually on a different policy admin than like an individual life product. That's what you end up finding. So my answer to you is, we see a progression starting with individual life that is taken off first. Annuity is still dramatically behind. So we serve life, annuity, and then group life is more emerging right now for us, but that hasn't been it's been interesting due to some of the constraints they've had, both in premium dollar and also access to the literal pocket or the phone of the policyholder. That one's been slower as well. And the way to explain that is like, if I buy an individual policy and or voluntary, like I have a direct relationship, brokers have controlled the group life space. And so the insurers have been working hard to figure out how to basically even have a relationship with the group policy holder, if that makes sense. Like if there's a 1,000-person group, a lot of times, and I don't know if you know this about your company, but like, who is your group life provider? A lot of times people have no idea.
No idea.
Literally, I mean, it's very common. Like no one knows, right? And the reason that is the group life provider is actually behind kind of like a firewall, so to speak, of like getting access to their actual policyholders. Usually coming out in what like a typical like census sheet, where like it's almost like an Excel. I mean, I'm simplifying here, but like an Excel is the system of record of like, here's 1,000 employees, these are ages, and then the insurer underwrites those. But it's not as if those people have like typically like a digital account or access to that insurer. And so we see the desire for that to change here because, well, it's just not everyone realizes that the world is changing and everything needs to be accessible and digital. But our main line of business, so we have a lot going on and interesting group, but that hasn't, transparently, that hasn't been, the market hasn't made as many moves there is why I'm kind of clarifying.
Makes perfect sense. And Sureify's been around for a good while, right? For like you guys are kind of like before InsurTech was called InsurTech.
Well, yeah, that just means I was, wandering the mountains, alone, lost, very snowy, very steep mountains. Yeah, so like we technically formed, myself and a couple co-founders formed in 2012. So coming up on 10 years here, where we actually were pursuing building D2C insurance applications. So we were trying to build like the mint.com of insurance first to aggregate all your insurance to one place. Then we actually built a couple aggregators. We actually had a month or two where we were doing an auto one. Then we moved over to the life one. Then we built a life insurance learning platform. And so I'll jokingly say, well, the mint.com insurance didn't work because no one woke up in the morning wanting to aggregate their insurance to one place. That's always my line. It's like, if you're doing anything D2C, people have to wake up wanting to do what you offer, what your core value prop. And then when we built the life insurance learning platform, as an example, no one was waking up in the morning wanting to learn about life insurance either. So that was also a struggle. But where our main turn came in 2016 was I had kind of gone through, as I said, I was wandering the wilderness. So I was gone through valleys and streams, and we actually were looking to build a new life insurance product. So this is years ago now, but we were looking to build like an MGU, like the ones you see today, like the Ethos, Fabric, Bestow, et cetera. Yeah, and so we were looking at that, and I was actually looking to get backing from a product. No one was getting product backing like they do today. Like MGAs and MGUs, like backed products are big, and it's very common now. But back then, no one, whether it was me or the industry, no one was ready to do that for us. So, but what we kept getting is, I like what you're doing. Like, why can't we license or buy the technology or work with us on tech? And so that was 15. And so in 16, we basically crystallized / got our first contract at the end of 16, got funding from Hanover Reinsurance Company early on. They were one of our first backers. And so long story short, we went B2B in 16, but those first from 12 to end of 16, that was wandering the wilderness, learning, trying things, failing, and a lot of things that, we got to cut our teeth at a lot of different things while I also had to fund the company. There was all self-funded. And so I started another agency where I was building, this was product agency. So I was building applications for other companies. So learned a ton. And then, after years in wilderness, I guess we were sharper, more tried and true. Surely not as sharp as you become year over year, but it ended up being a pure B2B play, and then we went from there.
I love the metaphor of the wilderness. I'm not a founder, but everything I've read and having interviewed a couple hundred founders, it's a very apt metaphor. So I thank you for sharing that. I'll probably keep using it.
Well, some people make it right into the city and do really well, but I think there's the group of maybe, I hope it's, unless, it does seem like most people, when you really get to know them after a couple of drinks, there's typically a longer period of wilderness. And sometimes you find a clearing and it feels good, and then maybe you enter the wilderness again. But it kind of, or sometimes the city around you turns to the wilderness. So there's a lot of, trial and error. But you actually, like they say, in the wilderness, you find a lot about yourself, and you learn a lot because you have to rely on other things when you're learning. So I would never take it back. That is how you grow, but it's not always fun, especially when you're running out of money and stuff. The worst part about being a founder is not having the resources you need. That comes down to money in some sense, and usually in a technical sense when you're running out of money.
So now you're sitting about 5 years post having found your niche, 200 and some employees according to LinkedIn. How many clients? I know that the life space is very different from PNC. In PNC, there's like 3,000 carriers in the US, right? In life, there's probably 100 carriers at most. Like, there's just not that many. So how many clients are
Well,
in
I
some?
got. Well, I can drop some news for you. So for starters, there's about 450 active life companies in the
Okay.
U.S. So AM Best, just from a market perspective, there's about, like, if you were to run a technical search on registered life companies, there's going to be like 700 or so, but a lot of those some of them will be domiciled, and some of them have been acquired or sub
Yeah,
companies.
they're the
So when you
same
boil it down, there's about,
management company. Yeah.
yeah. So when you boil it down, there's about 450.
Okay.
So more than 100. We don't expose exactly how many we have, but in 2000, I can't remember, it was 2019, we crossed, or 20, we crossed the 10 mark, and have been growing pretty steadily since then. Like during the pandemic, for example, we doubled our employee count.
Oh, awesome.
So it's been growing a lot. And also in the last 2 years, we've raised 20 million. We've raised 20 million. We've raised about 26 million to date. And so long story short, there's been, a lot of growth. I think crossing the 10, if I'm honest, crossing the 10 insurer mark was a big deal. And you said I will tell you, like, we aspire to be, the select, we'd like to be a part of every, life insurer in some fashion. We'll see how it goes, but it's nice work, because we're agnostic to the insurer, as well as we can work with small and large, mixed with the fact that we're white labeled. We think everybody could, many insurers, or most insurers, could surely have a good use for our verticalized life
it makes
software.
sense, right? I spend my days chatting with PNC business unit leaders for my day job. I sell them staffing services, and so I don't touch life, but just based on what I hear from the people that I chat with, it makes sense. Generally, they love white label because it allows them to look good to the customer with a fully modern
Totally. I mean,
UI.
Insurance companies want their brand. Insurance companies' brands are very, very reputable, and they've spent a lot of money building trusted brands. And so I think if you lean into that and get out of the way of your own brand, it can be from a technology side, it can be very lucrative. And we have some of the most premium brands in the space. And so we just lean into the idea that we want the executives to know our name. And after that, we'd love to be a part of every purchase or sale or service change or whatever, but they just never going to know we exist.
And out of the clients that you have right now, at least some of them are fully deployed, like fully functional. The project has been done. It's operational. Yeah.
So we were fully deployed on our first client in 2017.
Okay, awesome.
So we've meaning like our first go live was in 2017. And then since then, like when you do a deployment, like when you do a purchase, I mean, they can buy our modules. You can buy 1, 2, or 3, because there's only 3 that are like our SKU products on our platform. And so long story short, some buy all 3. That could be a longer transformation, but usually they'll go live, like I'd say in as quick as, 4 months, 4.5 months. And so then as long as, as long as, for a go live, it could be, past 6 upward, if they're doing a massive kind of like
4 to 6 months
stack change
is very fast for our industry. That like freaking, guide-wire transformations on the PNC side take, 4 to 10 years.
Yeah, I mean, a lot of times you'll see like the policy and so policy admins will have, because of like them uploading the products and doing all this stuff, those are going to be a lot longer. Our projects could go, I mean, once again, I think you have the tech side, and then you have the integration, and then you could have ongoing changes or kind of innovation they want to do, which is common. Like a lot of our clients still work with us, yearly on different aspects, because they're adding a module or they're adding new X, Y, or Z. But yeah, I think 6 is kind of our mean. I would say, like, when we work with a client, we really don't, from an expectation standpoint, 6 months is kind of like, you'd be surprised how often, like you just said, they're used to 2-year projects, yet the project they need now needs to be done in 4 months.
Yeah.
So
So
it's always a battle. It's like,
on the tech side,
by the time they sign the contract,
yeah, on the tech side,
your
engineers are going like 6 months a lifetime, and the client's going like, really, you can do it in 6 months?
No, well, you'd be surprised. People will come to us and say, "Oh, I need this. We need this live by," I'm going to make it up, it's Jan 1. We need it live by June, or it's December. Well, then we're like, okay, well, we need 6 months. Like, we need to do this right, and it's all about expectation setting to have happy, referenceable clients. So then you're like, you need 6 months. Then you're sitting at the end of January, the contract's not signed, and you're like, you're questioning, like, can I kick off work, or should I wait? And then yet let's say in February 15th, the contract's signed, and then they say, oh yeah, remember, it's going to be live June 1. And you're like, yeah, you were talking about that in December. It's now this. It's like, so it's hard. You want to make everyone happy. But I will tell you, early on, right, we had to make big moves. There were times, like early days, going back to 17, et cetera, when we were starting work before the contract was signed, just because it was like a flip of fortunately it always worked out, but it was like a flip of a coin. Like, we knew we couldn't hit the deadline if they waited to when procurement or whatever is actually going to sign. And then on the flip side, the business unit's like, let's go. And you're like, so we're going to work for 2 months without a contract. Those are scary days. They really are.
I hear you.
Especially when you're low on money and so, but it's all worth it. You gotta make big. You gotta risk in the beginning, as we talked about going through the desert, and you got to make some big risks. And fortunately, it worked out. We came out of the other end.
Congratulations. It sounds like things are going very well. Just to finish up here, I was clicking around the website, and I do find it very impressive. By the way, the website is very easy to read. So it seems to be very well done. So I was looking at the Engage platform, at the Lifetime Engage platform, and so super impressive. So in both PNC and I'm guessing in Life, part of the problem is that the client engages with us once a year to renew, and when they have a claim, right?
Right.
And I'm sure that in Life it's very similar, and claims happen much less often, right? So the problem is they never think of us, right?
Let's hope so, right?
Yeah. Well, yeah.
They never. And if there's a claim on the life policy, then it ain't you making the claim, right?
Yeah.
So you're not engaging.
So
it's someone else's, right?
I see the stats here that on that particular platform, on the Lifetime Engage, 55% of users are active on a monthly basis, and even more impressive, 21% are on the app once a day. For insurance, that is incredible, right? Because we're the last thing people want to think about, and it's Life even worse, right? Because because basically we're talking about my death, right? So yeah, anything that can get my client to think of us in a positive way and engage with us more often is a win, a huge win.
Yeah, and that's coming from insurers. Yeah, and we, it's not the traditional, like, that's what people say, like, how can you get someone to engage, or why would someone want to engage with your life insurer? Well, it has a lot to do with changing the aspect of a life insurer being about your death, and actually really trying to make it about your life. You see, this is a pretty common theme you may have been seeing pop up, which is like, how do you be a life insurer and make this about the success and growth of someone's life? So to be very practical, is like, everyone right now is living under the guise of physical well-being, mental well-being, financial health. So when you work around that, there's certain things that will create a daily kind of aspect. I will tell you, my hypothesis for the life insurance space is definitely like when I work with a life insurer, because that only works with certain products and certain programs. You know, and I'm trying to talk about that. But ultimately, when you're driving someone's health, you can do things there. But what I see is that the life insurance space in general has an opportunity to have a digital relationship with their customer that is broader than the bill that you just send them. So that's like the extreme of what we would say is the state of the land. But on the flip side, it's also different than like trying to be a health insurer or drive them just on health. That is one aspect, but we think like there's definitely an opportunity to engage with any life policyholder, you know, at least a couple times a year, let alone, you know, 6-8 times a year. And it's such a dramatic difference in a relationship. Like NPS or like persistency just goes through the roof when someone who's paying that yearly bill, like at least has a acknowledgement or a known and fact that their life insurer does more than just bill them, right? Because again, they're never going to receive the benefit. So if there's information and capabilities given to the beneficiaries, i.e. like their ability to, like one thing that we're seeing a little of in the industry is like being able to educate and keep that beneficiary in the know. Like most people pass and then the person that's the beneficiary doesn't even know or doesn't even know who the insurer is or access. So you have to have wills and trusts, which is not a very common, like the upper class usually has that versus us everyday people at the bottom. The second is, you know, being able to create something that's valuable to me while I'm alive, which is a lot about, you know, like we said, financial education or personal health and just a company that really invests in them why they're here. And there's just so many areas given how little it's done today. I think we're really just on the beginning of life insurers engaging that customer, but also remaking products to fit around that. And we've seen some of that, whether it's John Hancock's Vitality. I think John Hancock's definitely been progressive in that space where they've driven some very like novel, which is Vitality, or they have, I think it's called Aspire, which is a diabetes management life insurance policy, where they're trying to like kind of create personalized persona experiences that meet that customer where they're at and keep their mortality high, but also be more than that yearly bill and just a death benefit protection. So
anybody from
there's a lot to do there.
For the listeners, if there's anybody listening from John Hancock or from any other life carrier that is doing interesting stuff on the client engagement side, I would love to have you on the podcast. And I would prefer to have like a product person, somebody who was part of building the new product, the new ideas, not just a marketing person. But yeah, if somebody's listening, send me a message. I would love to have you on the podcast.
I might know. I actually, just so you know, I know a few of those. So
send them my way.
People use our technology. Okay, yeah, because people use our technology, right? Like we can run program. We don't run. Vitality and John Hancock have partnered for a lot of that stuff. But there's a lot. There's a lot going on there. So,
awesome. I would love an introduction to anybody on that side. Dustin, it's been great. It's been great. I kept seeing Sureify everywhere, basically, and mostly not really paying attention because I'm a PNC guy. But I am so glad to finally connect with you guys and have you on the podcast because this has been super interesting. And thank you so much. I look forward to see as you guys keep modernizing that aspect of life insurance, and you're always welcome to come back as you keep growing new products and new interesting successes. Thank you so much for making some time today.
Well, appreciate the invite and always enjoy talking shop about the life space. I do. I think of you guys pretty often. I think I bought 10 of your Insurance Nerds mugs for the office. I really did. I know maybe not a lot of people buy those.
That is fantastic.
I literally bought like 10 at once. They're expensive mugs, you know, like $15, but they were worth it. So then when we're sitting in meetings, we hold them up. I actually don't have it here because I'm sitting at the house. But I did buy a bunch. Those are our mugs in our office. We have personal mugs with our names for everybody, and then we also have Insurance Nerds mugs.
I absolutely love that. So you guys probably own like 30% of all the bugs that we ever created. So I appreciate
Well, there you
that.
go. I'm glad we do.
And for the listeners, I'm hoping that in 2022 we'll have better merch. We've never been good at merch, like you said, they were expensive. One of the things that I would really like to do in 2022 is get good at merch, because I think we have the brand for it. So any listener who is good at merch and wants to get involved, let me know. And what I mean by good is they need to be high quality, they need to be fairly priced, and we don't want to carry inventory. So if you know how to do that, reach out.
I think there's solutions for that, Tony.
Oh,
We'll
I'm sure there are. We've
off
just
the
never
podcast,
concentrated on it.
No, yeah, no, I know there's like these drop, what do you call them? Like fulfillment centers that they'll probably just in time create the stuff. But, insurance nerds is a fun. There's not that many insurance nerds, and I think we fall in that category. So I kind of, it's like wearing a Star Trek t-shirt or something. You got to get to claim, and then people are like, what do you mean you're insurance nerd? So I think it's fun.
Well, thank you. That was the whole idea. And what I've learned along the way is there are quite a few of us. The problem is, like, in 12 years in the industry, I have met a few hundred of us, right? And there's 2 million people in our industry. So unless you're like actively searching them out, they're hard to find. But yeah, there are many of us that are passionate about our industry. And I'm glad that in one way or another we've created a place for those people to kind of meet each other and to have a brand to kind of collaborate around that's independent, right? That's not a particular carrier or a particular supplier. So yeah, no, for me it's been an absolute blast to create this thing, and maybe someday we'll actually make it into a revenue generating business.
Yeah, well, the best ideas start like this, and then
so when you were talking about,
you guys are mature, but
when you were talking about walking the jungle,
you guys
for
are
years,
mature already, but I guess
that's
yeah.
exactly.
Yeah, no, I know, but how many of these have you done? You said 200 and
how many episodes of Profiles? So there,
yeah.
We're recording today on November 11th, and as of today, 260 of them have gone live. I have several more that have been recorded that haven't gone live yet, and this episode might end up being like 285 by the time it goes live.
Wow.
Yeah, we've done many of them, and it's been an absolute pleasure. So Dustin, thank you very much for your time, and yeah, let's keep the conversation going. Thank you.
Alrighty, Tony, thanks so much. Thanks, insurance nerds.